Okay, it looks like we're live. Good morning, good evening, good afternoon to everyone. There you go. Alan Kirk is in Melbourne, so it is good morning. We've got Ponzi, um, Echo Echo. They found a tunnel under the hospital in Gaza. Yeah, I'm not really following that too closely. Anyway, Ant H says Mario and Rudy. Yeah, he's fast asleep there, Rudy. He's been out a few times. He's not too keen going out in the garden when the weather is like wet and cold. So we go out quite a bit for walks. Yeah, buddy from Connecticut, Simo from Sydney. Good to see a few people from Sydney or from Australia. Alan P from Texas. ID Doc from Dallas. Daryl Ruffley says, G'day, Mario. I guess he's an Australian as well. Mary Dorimas, hi, Mary. Riqua from Montreal or Montreal, if you want to be correct about the pronunciation. Andrew Watson, he's a regular. Nice to see you. Rumpelstiltskin, nice to see you. It's pretty early there. Mr. Silver knew Mr. Gold and nobody special. Interesting. Well, I invited a few other people, but they didn't take me up for it. But it's nice to have David Morgan on. I think I've been following him for almost 20 years. So it's about time, I guess, he came on the channel. So I'm looking forward to speaking with him. They should be on in about 5 minutes. Andrew Brown from the Scottish Borders. Miguel de Murillo, the guy who's buying pancake crypto coin from Oklahoma. Ann Hughes from Bournemouth. Daryl Ruffley says hello, Muppets. Pete Dutois from South Africa. That's a good South African name there. Afrikaner. Rudy's on the couch like Billy used to be. Yeah, he's amazing how he's gotten used to it. I didn't expect him to get used to it so quickly. Did you see the new Matt Bittner? Did you see the news about a possible PBR special dividend? No, I haven't. That's interesting. I haven't seen it. Riqua, Montreal, Montreal are both acceptable pronunciations. We're a bilingual city. Grandpa Barney. Rich, yeah, I don't think dogs like wet gardens. We've got Jaidu De Voice from Schwenningen in the Netherlands. Yeah, and here we go. They're coming. They're here already. They're a little early, which is good. Hi, guys.
Can you hear me okay, Mario?
Sure. Oh, hi, David.
Hello, Mario.
Hey, Dave. Good to see you.
Hi.
Oh, my camera's not running. Hi, Dave.
Hi.
David, thanks for coming on the channel. And we had never had you on, so that's nice to see you. And someone mentioned that you weren't well, so I hope you recover. I don't know what was wrong with you.
That's a long story. I'll tell you offline sometime.
Yeah. Okay. Hi, Jack. You all right?
I'm doing good. Thank you, Mario. It's good to see both of you guys.
Yeah. So we want to talk about today. I mean, the topic for the live stream, and then we can go into other topics, is about this Dutch central banker. I'm gonna bring up the story here, and I actually asked Jan Nieuwenhuijs to come on, and he actually replied, and he said unfortunately he couldn't make it. So this is the story here I thought was interesting. Dutch central bank admits it has prepared for a new gold standard. And it's from a podcast in a financial podcast in the Netherlands from October 5th, I think. So it's an old story, but these stories, they come out, they're in the Netherlands, they come out later in the bigger, wider world. So I'm just going to go through some of the transcripts here, and then I'll let you guys chime in with what you think. So it says here, the interview with Aerdt Houben, Director of Financial Markets for the Dutch National Bank, was conducted by Anna Dijkman from Het Financieel Dagblad. Following is a translation of the most important part of the conversation. In the first segment, we hear Dijkman make a few comments for the listener in between Houben's talk. So this is the Dutch central banker, says 600 tons of gold. That's our total holdings. It's worth about 35 billion euros at the moment, and we have diversified it around the world as a good investor should. We've spread it over 4 locations with about 30% in the Netherlands, just over 30% in New York at the Federal Reserve, over 20% in Canada, and 18% in London. The gold really goes way back. At the end of the 19th century, DNB started accumulating gold, which was important to establish confidence in our currency. So I think these are interesting things he says. So Dijkman asks, the Netherlands was on the gold standard at the time. That means money was backed by gold at the central bank. People could always exchange their banknotes for gold. That lasted until 1936. And for those of you who saw the thumbnail, I have a couple of Dutch 10 guilder gold coins from 1932. They're really nice. I think they're about 0.1947 of a troy ounce. Anyway, after World War II, another monetary system based on gold was introduced, Bretton Woods. More than 40 countries agreed with each other that their currencies had a fixed exchange rate against the dollar. The dollar, in turn, could be exchanged for gold at a fixed price. And Houben says the Dutch guilder was actually stable to gold via the dollar. We received dollars when we had surpluses, and we lost dollars if we had deficits. And the dollars were redeemable in gold. I'm going to skip now to, and I've put this article in the description if someone wants to read the whole thing. But this is what he was really interesting to hear a central banker say. The beauty of gold is that it's stable in value, retains its value. That's one of the reasons why central banks hold gold. Gold has intrinsic value, unlike a dollar or any other currency, let alone Bitcoin. I'm not trying to get anyone angry. I'm just reading what he said. Gold has value on its own. It's a fungible product. It's a liquid product. You can buy and sell it almost anywhere in the world. So it's really an outstanding commodity to base an exchange rate system. So I'm going to stop here for now, and then we'll go back. So first I wanted to ask you, David, what you think about this, and also maybe talk a bit about silver's place in the in the monetary system.
Okay. Well, first of all, thank you, Jan. I've known him for a long time. Great article. I think there's a strong case to be made what he wrote, that, the more and more that these other countries accumulate gold, they have the ability to back their currency by gold if they choose to do so. I won't touch on the silver thing right now, but one thing I thought of when you invited me was going back to, my history, not necessarily the gold history, but in my lifetime. So gold peaked in January 21st, 1980. It was about 850 on the spot market. But if you took M1 and divided it by the amount of gold that the U.S. had at the time, a full 100% gold cover ratio is $400 an ounce. So we could have, at that time, gone back on the gold standard. And yet it went to 850. It was intraday. It didn't stay at 850 very long, but that was double what was needed to go on a 100% gold-backed currency. And of course, it didn't happen. Volcker came in and, moved the interest rate sky high, and gold had its day, and it started to sell off in basically went into a 20-year bear market, such as silver as well. So I want to get that out there that, what we're saying in this article is that if you can, you don't necessarily have to have a complete, 100% coverage, but that is a gold coin standard. That's the most stable. Those are the ones that go 100 years and prices never change. And I'm exaggerating slightly, but it really maintains monetary stability. But you can have a partial cover, like 40% backing in gold and that type. Regardless, coming back to silver, that's a very interesting question because basically the United States Constitution started us on a silver standard. And really, the world was on a silver standard for quite some time. And what I find absolutely fascinating, Mario, is that today, no one considers silver to be money except for a few of us, really. I mean, the Romance languages, the word silver and the word money are synonymous. I mean, you can't tell somebody in Mexico or Argentina that, silver isn't money. You would have to tell them in their language that, plata no es plata. Silver isn't silver, or money isn't money. I wouldn't understand what you're talking about. But in the rest of the world, silver's been demonetized for a long time. If you go back to before the demonetization of silver, when that really was more or less the silver standard, you go to the pound sterling and everything else, we're talking about the silver, that you didn't have money unless you had silver. So today, very few people have silver. But back is to 1900, if you didn't have silver, you really didn't have any money. And yet I just did, I've done this a couple of times, and I know I can be long-winded, but Jack, bear with me. If you paid everybody in silver in the United States for one day, you'd run out of silver. So right now, the average wage, believe it or not, I verified it by Google. If Google's right, the average wage in the US is $25 an hour, which is about 1 ounce. So 1 ounce for an 8-hour day is 8 ounces in a day. There's 130 million Americans in the workforce. So if you do the arithmetic, you multiply 8 times 130, you come over 1 billion ounces. And that's the absolute maximum amount of silver in a year as far as above ground mining, recycling and mining. So one day, for everybody to get paid at the current paper price of silver would wipe out 1 year of the silver supply. In fact, more. It's like 1.2 billion. I'm not doing 8 times 130 in my head, but I know it's over 1 billion. So where would that put the silver price to be equal to what it was when my dad was working in 1960, before we went off? We really weren't on the silver standard, but you could turn in a silver certificate. They circulated, and circulation of coinage was silver, 90% silver in the United States. He made about 4,000 a year. So what would you do? Multiply that by 365? I mean, I don't know the answer. I'm just giving a thought experiment here, how undervalued silver is as far as its highest use, which is money. The highest use of silver is money. One more point, and I'll give it back. And that is, if you look at a chart of silver gold ratio, that from the 13th century to present day, silver gold ratio, gold silver ratio rather, was 20 to 1 or less for 4,900 years. It's only been in the last 120, 130 years where it's got above that. The reason it held that ratio was that was what I call the natural ratio. That means because they only served one purpose up until roughly 1900, and that was they both served as money. Gold served as money and silver served as money. Once silver started to become a technically advanced strategic metal for war and all things technological, electrical, electronic, that's when silver was really made a commodity only, and there was something that was created called the Silver Users Association, or as some of us call it, the Silver Abusers Association, which was really a cartel to make sure that the price of silver stayed low so that they could use it in industry and make a greater profit. So I'll leave it there. I'll give it back to you. But you asked me a question that kept me started on silver's value as money. And the point is, silver's actually, history shows us, more valuable as money than it is anything else.
Yeah, even in Portuguese, I'm originally from Brazil, it's called dinheiro, which comes from denarius, which was a silver coin. In French is argent, that's money as well. So yeah, Jack, your take on what the Dutch central banker said your view. I'm not too sure I know your view on gold and silver that much, so I'll let you have the conch.
Well, I'm very much a fan of gold and silver and sound money in general. I would be delighted to see the Dutch, or any country for that matter, go back on the gold standard. I don't know much about the Dutch central bankers, about this individual that was being interviewed, if his, to know about his sincerity. I remain incredibly skeptical that this would ever happen, though. I would love to see it. I would absolutely love to see the world go back on the gold standard. I think so many of society's problems, maybe not outright solved, but would be helped, or at least contribute to the solution to those problems, if we had a more stable money supply, and this looting of the public via inflation would stop. But I just don't see that happening. Everything I know about bankers, about powerful people, they don't give up their power willingly. They will kill to protect their power. They will destroy countries. They will destroy businesses, certainly families and individuals, to maintain their power. And were the world to go back on a gold standard, the central bankers, and thusly the bankers who own the central banks, which we don't even really know who they are, they would be giving up their ability to loot the public finances via inflation. And I would love to see it, but I don't think this great epiphany will wash over the powerful people of the world, and they will suddenly become benevolent and give back this power that they have unjustly stolen from the public. I just don't see that happening, not without things getting much, much worse first.
Yeah, I think it will only happen if they lose complete control of the system, and it starts from the bottom, and people just starts organically. And David, just I guess we're talking about the gold standard, and I know you're a silver guru. Don't you think like a bimetallic system, that's the best thing? And people might argue, oh, we need silver because it's a strategic metal. But if you make it money again, let it be money again, can you imagine how much exploration and digging out silver there will be? And I think there's enough silver to fulfill those two functions. So what's your view on that opinion?
Well, history absolutely shows a bimetallic standard is the best, and it's best when it's floating, it's not fixed. So you can't say that 15 ounces of silver equals an ounce of gold, which is what has been mandated in the past. And a trimetallic is even better, where you have copper, silver, and gold. And if you have those three metals functioning, then the market determines how many coppers equal silver and how many silvers equal gold. It functions the best. So, and what's interesting to me, you didn't ask this, but I'm going to insert it. In today's world, where everyone is taught to use electronic digits as money, really it's beneficial to the public, because you can micronize a bar of silver or copper and get into 6 digits if need be, to transact in grams or grains even, and make all those transactions and keep the metal in a warehouse or whatever. And of course there are some cryptocurrencies that are doing exactly that. But people say, well, it's too heavy, or you could get robbed or whatever. And that's true. And so with today's technology, it's actually really beneficial to go back on an honest money standard.
I agree with you. And I guess the problem is trust. But, maybe we have to go through a total crisis collapse in order for people to find ways. We're talking about, we mentioned Argentina, David, because Argentina also means the land of silver, I guess, Argentina. And today they have the runoff election for president. And I took the Guardian because they have the latest report about the election, and they're saying Argentina holds breath as far-right Milei seizes narrow runoff advantage. So it's interesting how they call this guy, and he might be controlled or whatever, but he's come out and said he wants to abolish the central bank. And many people say he wants to bring back the dollar, but he doesn't say that if you listen to him. He wants to be free competition for money and currencies. Of course, the dollar might do well in the beginning. And he's a Rothbard disciple, Austrian School of Economics. He wants small government. And yeah, and yet this is quite interesting here. I wanted to show you guys. Where is it? Oh yeah. Oh yeah, here. Here's a guy who wants smaller government. He wants sound money. He wants free markets. And they say the view was echoed on the eve of the election by more than 100 leading economists who warned a Milei presidency could cause economic devastation and social chaos. But I mean, the Argentinian economy is already devastated. They've got over 100% inflation, and 40% of the population lives in poverty. So I'll ask Jack what he thinks about that, and then David can.
I just love that quote. All right. More than 100 leading economists, more than 100 of the people who created this disaster in Argentina say that if we elect a guy who wants to try something different, it would be just catastrophic. Catastrophic for who? You've had over 100% inflation in that country for years in a row. There's no excuse for it. Argentina is a producing country. They're one of the biggest food exporters in the world. And yeah, they've struggled with drought for the last year or two, but a well-run economy with so much exports, they should be fine. But Sergio Massa, the guy who's running against Milei, is central banker. Look at what he has done to the supply of money in Argentina over the last few years. It has increased thousands of percent. And in a shocking turn of events, when you increase the money supply by several %,000%, you get inflation. Who'd have thunk it? I wonder if those 100 leading economists want to weigh in on that. And this stranglehold that the Keynesians have and their idiot cousins, the modern monetary theorists, who have absolute power all over the world. They will say this far right libertarian, right? Label anything you don't like as far right, and it'll swing a certain few percentage in the polls, because most people will just hear far right and recoil in terror without actually reading what these people stand for. But what a concept, getting rid of the central bank. It's a country that already has several 100% inflation, and you already have widespread poverty. So what if we try it? Well, hey, your house is on fire. What if we try putting a little water on it and see what happens? Yeah, your stuff's going to get wet. You might ruin some of your electronics, but you know what? You might put the fire out. It might be an improvement. So I am watching very closely what happens in Argentina. And I think either way, regardless of what happens, the Argentine peso is going to take a nosedive off a cliff come Monday morning. Because if Milei wins, supposedly, I've read that he wants to make the U.S. dollar their currency. You were saying you don't think that's true, that he's never actually said that. But you're going to have a lot of people getting out of the Argentine peso if Milei wins.
Yeah,
and if Massa wins, he's going to print. So
people will go to the dollar. It's just that I've listened to him. I understand Spanish fairly well. And what he wants is like competition in currencies. It can be anything. He even mentions gold and silver. So, yeah, David, what's your view on the situation in Argentina? And do you think if he wins, it could actually be maybe some kind of spark for the rest of the world?
It could be. Obviously, I'm a fan of Rothbard, quite a fan, actually. And, as Jack said, it's the semantics that the power elite lay on us. Far right, what does that mean? I mean, right means correct. I mean, the correct economic view has been shown to be the Austrian school. It isn't perfect. It doesn't have everything right, but it's much more valid than the Keynesian model, which is what these 100 experts said was the way to go. Well, if it's the way to go, how come they go into a currency crisis every decade? I mean, this is Argentina's past. They continually go into this. And yet capitalism, the Austrians define capital not as money. The Austrians define capital as a means of production. So as Jack said, if you're a strong producing country, you should be fine. It's just when you print more than you've got produce to export, you're in trouble, and they continue to do it. So it really sickens me that the mainstream press can get away with this nonsense. But the problem is that no one's really taught true economics in school. They're taught in all this bizarre language, and you're not smart enough to know what it is. You got to talk to a PhD economist that graduated from Harvard, and writes for the New York Times that knows what's going on. It's a bunch of hucky puck. I do think that just one person armed with the truth, which this Amelia is doing, will wake up more people, and that could spread. I mean, the power of the internet, even though it is being censored a great deal, is a lot of people still will wake up to the idea, and they'll look it up and they'll understand. They'll look up Austrian economics, or they'll look up sound money, or they'll look at your website or whatever. So the truth wins in the end. And the truth is, you can't print yourself wealthy. If you could, Zimbabwe would be the richest place on the planet. And going back to the dollar, yes, it's very common. In fact, it's funny. I just put a Twitter out this afternoon where I was talking about the African situation, and almost all these countries that have these inflationary problems like Venezuela, Argentina, Turkey, etc., they have a black market in U.S. physical paper. And the reason that they do is because relative to their currency, it's holding its value. 60% of all physical printed bills are overseas. Only 40% are within the U.S., and they're used over and over again. So there's a black market, or what I would call, a Rothbard would call a free market, in the U.S. currency, because that's the only way to really salvage your remaining wealth if you are in Argentina, Venezuela, et cetera. So there's a lot to be said with righting the ship. But as you said, Mario, and I agree with you, I don't think that they're going to go to a gold standard, even though we're talked about that in the Dutch article or the Dutch bank, until it's their last resort. I think the bankers really look at gold as the money of last resort, but they're not going to use it until they have to. I think they're going to try to implement a CBDC of some type with no backing whatsoever and force everybody on it with their universal basic income and do their best to maintain control of basically a total electronic fiat system.
It's interesting. You said in the beginning, like of our live stream, you were talking about when gold reached almost 900 on January 21st, 1980. And then you said it was like double the M1, was it, or M2?
Yep. It would be twice the cover ratio for M1.
Yeah. So actually, and then 400 used to be a really important number in the price of gold. So they could have easily have kept gold, below in the band around 400 and kept the money supply constant. That's the fallacy of the Keynesians, and people think that you need inflation for the world to grow. I've looked at the Bank of England inflation calculator, and it goes back to like 1200 or something. And if you do from 1816 to 1914, when they went back on gold after the Napoleonic Wars till the start of World War I, the average CPI per year was minus 0.4. And you can't tell me that the British Empire didn't do well during those 100 years. So this
I have to interject. I'm sorry I interrupted, but we wrote a chapter in our book, The Silver Manifesto, and in a sound money system that you just outlined, you actually get a gentle deflation. So you didn't need a financial planner if you're saver. If you know it cost you, make up a number, $1,000 a month to live back in the good old days, let's say, and you were 20 years old and you were going to retire at 60, and you had 40 years of work, you would know 40 years hence that dollar would be just as valuable, really more so, when you retired than it is the day you started working. That's the beauty of a sound money system. It's really fair to everybody. It's not a top-down system where only the elite that print it first and give it to their buddies actually do it at the expense of us lower down the food chain.
Yeah, you have to wonder why they stopped that. I think World War I has a lot to answer for, but I haven't got that book. I need to get that, The Silver Manifesto.
I actually have a signed copy right here that Dave was kind enough to sign this for me at the Silver Symposium 2 years ago. And I didn't know Dave was going to be on this stream. I didn't plan this. I just had it handy. So thanks again, Dave.
I've got a book here, guys. These are excerpts from the Times of London, and from 1933. It was reprinted, and it's all about gold. And there's a section here at the end. It says aspects of the gold standard, and you read the stuff here, and there's still like believe, it was a good thing back then in 1933. One thing that is interesting is they talk about how the good thing about a gold or even silver standard, that it provides stable exchange rates. So I'm not going to read it, but I just wanted to show you here, guy, but because I've read it, so I can tell you, and then we'll see what you guys think, because most people think it's just because it's also sound money, but the other interesting aspect of it is that it makes currencies around the world reliable, because if you're on a gold or silver standard, if a merchant in, let's say, Canada buys something from China, they can be sure that the yuan will be convertible into gold, into real money. So it facilitates trade. And they also talk about how it facilitates financing overseas and international financing, and also just trade. So maybe you guys could touch upon that, not just the sound money aspect, but it actually so start with you, Jack.
Ultimately, it was the US's inability to function in a fair trade environment that killed Bretton Woods, right? The United States operated at such a trade deficit with the European trade partners that over the course of the several decades of the Bretton Woods agreement, they just started to accumulate so many dollars. And, we told them, yeah, it's redeemable for gold, no problem. And as they started to accumulate more and more dollars, and we continued to print more dollars and buy more stuff from them, they started, hey, I'm starting to have doubts that you really have all that gold, And then the French sent the Océan there. They say it was a battleship. It was actually more like a destroyer or a light cruiser that they sent. But the story sounds a lot better when they say they sent a battleship for their gold. But one by one, European countries started to have doubts that we had the gold. They started to repatriate it. Nixon realized, hey, guys, we're going to run out of gold before they run out of dollars to redeem, closes the gold window. So it was our inability to, I don't want to say operate on a level playing field, because it was a fair trade environment. We just couldn't produce enough. We weren't exporting enough. We were importing way too much crap, exporting only dollars, only inflation. And Europeans called us out on it. And there goes the gold standard. It was our inability to function within our means, to buy less than or to buy roughly what we sell, that killed the gold standard here in this country. And, it wasn't just the closing of the gold window in 71 that did it either. I mean, we had the gold revaluation in 33. We took the silver out of the coinage in 63 or 64. So, I mean, one by one, we had been debasing the country and slowly walking away from the gold standard until finally in 71, we just pulled the ripcord, and that was it. But it didn't just happen in 71. It was a multi-decade process that got us there.
David?
Yeah, I think you can look at it even more basic than that. I mean, if you're going to build a house and you know what a yard is a yard forever. So you have a constant that you can build a house by. But if you had a gold ounce, you've got a solid amount that you can measure by. But when you have a fiat system, then the price of gold changes in fiat terms. It's like the yardstick changing every time you go to make a measurement. And if you used a changing measurement as far as distance is concerned over and over again, you'd have one hell of a lopsided house before you ever got it constructed. So it really comes back to truth. I mean, I like to say, and it's been pointed out, Robert Prechter's done a great deal of work on this. He wrote a book, which is really in 2 books. It's such a long read, but on socioeconomics. But there's a direct correlation between the moral character of a society and sound money. Once you go off of sound money, you start to degrade in the social parlance of it's the social being of the society at large. In other words, it degrades more and more and more. When you get to basically the end, like Rome did, you have pretty much a free-for-all with the elites doing as much as they can at the top of the empire, as far as is concerned for the elites, and everybody else is left in poverty. And we've basically seen that again. By the way, just an aside, that one of the things about the end of the Roman Empire was that there was a great influx coming across their borders, coming into Rome, because they wanted free bread and circuses. They wanted free meal and entertainment. Reminds me of something that's going on at the southern border of the United States.
Yeah, here as well in the UK, a lot of the so-called refugees, they're coming here for the welfare state. It's a lot better than in where they're coming from. I'll just quickly read here because I think it would be interesting. So this is what he says in this book. When the gold standard was a working system, it provided the world with the benefit of stable rates of exchange. That is to say, anyone who bought or sold goods abroad or lent or borrowed money abroad could be certain that the money owed or realized by the goods or involved by the debt transaction could be brought home or remitted when the operation was completed on terms that could be calculated with a close degree of accuracy. So that's what you're saying there. We don't trade the size of the yard or the size of the meter every day. Can you imagine if you had a foreign exchange market? I mean, that's the other thing as well. I think the foreign exchange market is a complete casino, and that's the only reason why I don't rate Milton Friedman that much on money, because he said, oh, it's a free market, but he didn't quite understand what money was.
Yeah.
Any view on that, guys, on Milton Friedman?
Not a fan. I'm much more in line with Rothbard. I mean, he's pretty much anti-statist. He's pretty much let freedom ring and let the individual be an individual. And certainly he was a very generous man too. It's a lot of people think that you're a hard money advocate or whatever, you're really greedy. Actually, it's just the opposite. Most people that are for sound money are actually, pretty generous. But that's not the perception that the establishment wants to give.
Yeah, they say you're hoarders and misers, and you want everything to collapse. I just wanted to show the viewers, if some of you don't know David, that's his website, silverinvestor.com. And you've got quite a lot of followers on Twitter as well. So that's at silverguru22. And Jack, I guess Nobody Special Finance on YouTube. That's the best place for you.
Yes, sir. That is.
Okay. Oh, I just want to go back to that Dutch central banker. He said some more interesting things here. And then I wanted to look at a chart of silver, which will be interesting for David and Jack. So this is what he says, Houben or Houben. Well, I think once you let go of tying your exchange rate to gold, then one of the main reasons for holding that gold is gone. Then you might ask, why are we still holding that gold? Why gold and not a portfolio of stocks and bonds or something else? There are a number of things that make gold very attractive to central bankers. Gold is like solidified confidence for central banks. It's something that has historically fulfilled that role. If we ever unexpectedly have to create a new currency or a systemic risk arises, the public can have confidence in DNB, because whatever money we issue, we can back it with the same value in gold or a gold standard. So I think that's what Jan was talking about, that if there is a collapse of fiat currencies, and we know fiat currencies always end they go to zero, that they will use gold. So the reason why I did, wanted to talk about this is not to tell the public, go out and buy gold, it's going to go up in price, because that's not the reason why I've been stacking gold and silver for like 20 years. It's because it's insurance, and one day the fiat currencies are going to be useless. So just I'll let David comment on that.
Yeah, I mean, I'd like to break it down in 3 words. You already said it, Mario. I mean, all fiat fails. And whether it goes to absolute zero, I don't think the dollar will go to absolute zero. But also what you read, I mean, my take right now is that, as I said earlier, I think that the bankers know they're in trouble. They know we're getting near the end. they're going to implement to the best ability a new system. The new system is likely to be a cashless system, and it's all digital, primarily based on China's methodology that's working well in China, central bank digital currency. However, as that article said you just read, in my view, very likely event that it will fail, then they've got to resort to gold. They've got to put confidence back in the system. The whole system is a con job. It's a confidence game, and the confidence is being lost. I mean, the idea that the United States Treasury market, the debt market, a bill, a note, or a bond that was issued by the United States government being the safest investment is ludicrous. It's absolutely not. They can't pay these things back. And that's the problem. And it's been the problem for a very long time. Yet it seems as if let's say more of the establishment is waking up to that fact now than anybody that really knows how to do arithmetic would have known a long time ago. But these things usually, not only do they end badly, but they seem to, at least in the modern lexicon, to be in a situation they take longer than any of us would expect. I certainly never thought after the 2008 financial crisis, and even the mainstream calls it a crisis, that we would be able to go this much further, but here we are.
Jack?
So I would love to believe that we're headed back to a gold standard, and that the reason central banks are buying is because we're going to go back to a gold standard. I am highly skeptical of that, just because of the nature of central bankers. And the more I learn about these people, the more confident I am that they won't willingly take us back to a gold standard.
Yeah.
I think it's probably got something more to do with the illusion or the confidence game, as Dave mentioned. When they roll out their CBDC, they'll say, we've got gold backing it in the vaults. Maybe that's part of, they'll use it to try to inspire confidence in the central bank digital currency, which is the least confident means of exchange you could possibly come up with. I mean, and they'll tell you, yeah, it'll be redeemable for gold. And then, of course, as soon as the conditions arise where people might want to redeem it for gold, oh, your money's been turned off now because, extenuating circumstances, or we don't like your politics, so we turned off your money, which is tied to your social security number or some other personal identifier. And it basically becomes a de facto social credit score, because they'll reach in and they'll penalize you for wrong think or wrong speak, and they'll hit you monetarily. And if you think they won't do that, Canadian truckers, I mean, anybody remember that? And, lo and behold, Canada got rid of all their gold. But they were talking about earlier where the Dutch are holding their gold now. And they said, 30% in the Netherlands, 30% in New York, where, we defaulted on gold. We basically seized the world's gold when we closed the gold window in 71. They've got 20% of it in Canada, where they just demonstrated that they'll seize your wealth if they don't like the way you speak or talk. They've got 18% of it in London, who London just seized all the Venezuelan gold, didn't they? I think they won't let the Venezuelans have their gold back because they don't like the outcome of the election. And I'm not a fan of Venezuela and the ruling regime in Venezuela by any measure, but push comes to shove, the politicians in London didn't like the outcome of an election and their gold went away. And they say, oh, yeah, the Dutch are diversified. They're diversified by holding their gold with people with a reputation for confiscating wealth if they don't like what you say or what you do. And they're using this as an insurance policy against the U.S. dollar, which we just booted Russia from the SWIFT system. So, the U.S. will do the same thing if we don't like it. So, I mean, ultimately, if you run afoul of the powers that be in this world, they'll take what you have. And I don't think a central bank digital currency is going to improve upon that. It's going to make it just that much worse. And I really think this gold that they're accumulating, somewhere around 4% of GDP is what the European central banks are accumulating. That's not going to be enough to go onto a gold standard, not without a massive, massive revaluation of gold to the upside.
Yeah, I mean, I didn't agree with that reporter saying that it's good to diversify gold holdings like that. So yeah, 4% of GDP. I guess if gold goes up eightfold, that will be like a third of GDP. That might work. Who knows? But I wanted to bring up a silver chart here for David and for you, Jack, and then to talk a little bit about it, and then we can, if you guys are still okay to stay on for to ask questions from the answer questions from the viewers. So this is like a going back to the early 70s, and it's a logarithmic quarterly chart, and it just shows this huge, teacup and handle that we know about. And just want to ask you, David, what do you think this technical picture signifies? And yeah.
Well, a couple things. One, I wrote an article for Futures Magazine. They've only asked me to write one. And they wanted obviously to write about silver. I called it spiked, SPIKED, because I pointed out that silver has this propensity to spike high or spike low. You can see in 1980, we got this huge spike up to the top here, and then it spiked down in 1982, and you had a spike here. And then I also coined the phrase that silver will scare you out or wear you out. A spike moving up when you're short will scare the heck out of you, or a spike moving down when you're long will scare the heck out of you. Yet you had this really bear market between in the 1980s till 2000. I mean, it roughly traded in the trading range between 450 and 5 for a long time. I mean, all 1990, 95, 2000, a little bit longer. So, but if you look at it from the broad-based picture, it's a huge cup and handle, which is the most important formation you can have. You've got the tip there all the way up to the tip. That's your cup. And the handle, you want it to go from the upper left to the lower right and decrease. You don't want it to go up. You want it to go down, which it's doing. Now, technically, you really don't buy until it breaks above the cup, which is at $50. And that's a long ways to wait when it's at 23.72 now. I'm not saying you should wait. I'm just saying how the cup and handle trading platform works. But what we will see, I think, once we get above 50 and maintain it, that will become the floor. I do think when we get near 50 the next time, it will probably sell off, and everybody that's bearish, or maybe people that took a profit at 50 will say, that's it, can't get above 50. It's a triple top, forget it. And silver will rebase and come up and blast through 50 like a knife through hot butter, and then who knows where it's going to go. We have a natural corner on top of an investment demand that's insatiable. There is no limit to the amount of people that want money when their currency is failing. It's a panic buy. It's an absolute must. I have to have it. It's like everybody in Argentina going to get U.S. currency. There'll be everybody in the world leaving U.S. currency and trying to get into gold or silver. So I think we're going to see brighter days ahead of us. I'm not rooting for a collapse, as you mentioned, Mario, but it's inevitable. There will be a collapse in the financial system. It is collapsing as we speak, but it hasn't been manifested enough for the person on the street to recognize it as such. Yet there's somebody sitting in their house right now that didn't go out for dinner today because they can't afford to do it anymore, or their trip to their grandmother's because they can't afford the gas. Around here, it's almost $5 a gallon to make that trip. That's 300 miles one way. I mean, these are the realities that are taking place in the real world that really we don't talk about probably enough. But this is what happens again at the end of these great inflations, and it really devastates the working class.
Yeah, I also think 30, I guess, could be a very important level.
Absolutely. Once we get above 30, we shouldn't have a lot of trouble getting much higher.
Yeah. And Jack, what do you see? Do you follow technicals or?
So I do a little bit of technicals, and let me just stay a little more high level than that. When I invest in precious metals, the phrase insurance policy was used a few times, and I think that's accurate. I don't buy precious metals for the upside. I buy precious metals to improve my worst case scenario. Worst case scenario, dollar goes to zero, or some kind of deflationary collapse and the banks disappear and all your money goes along with it. So, a la the great taking, like we talked about in that video a few weeks ago. If you've got some precious metals, your worst case scenario is a little bit better. It's still not a good environment to be in, but at least you haven't been wiped out. That's why I invest in precious metals. If there's upside, it's free upside. I'll take it. I'd love to see it, but that's not why I get into metal. I get into metal to improve my worst case scenario. And I think that's probably why metals are so popular among preppers also, because preppers are all about improving that worst case scenario. They're not trying to take over the world. For the most part, they just want to be left alone. Now, we also talked about Argentina, and this ties in with silver, I think, and the ownership of physical precious metals. Dave mentioned the black market, and Mario, you mentioned the fixed exchange rates. And in Argentina, you don't have a black market. They actually call it the blue market. The phrase is the blue dollar, they call it in Argentina. And the blue dollar is what you can actually get for $1 in Argentina. The country, the central bank, Sergio Massa and his guys, they have their fixed exchange rate, which is about 350 pesos to the dollar. But the actual how many pesos you can get on the street or at a Western Union is closer to 900 pesos to the dollar. So lo and behold, the Argentine banks have a major shortage of dollars, because if you deposit your dollars in an Argentinian bank, you're only going to get 350 pesos, whereas if you go out on the street, you can get 900 pesos for them. So nobody's putting their dollars in the Argentine banks. And the Argentine banks have a major dollar shortage. They owe dollars, so their banks are collapsing, and they're trying to print pesos to make up for a shortage of dollars, just making the problem worse. So you've got this breakdown in the banking system in Argentina where people are more or less bartering the exchange rate on the street. Now, let's say something like that were to happen here in the States. There is no currency above the dollar right now that you can go to where you would have the blue dollar, right? The actual floating exchange rate on the street versus what the central bankers tell you it's supposed to be worth. And in an environment like that, I think silver and barter will come back lightning fast. I think a lot of people think trading precious metals or bartering is this old-fashioned means of exchange because we haven't had silver in the money since the 1960s. Most people alive today weren't alive back then. But from a historical perspective, barter and silver have been removed from the money for barely a tick of the clock. For almost all of human history, exchange was done via either silver, gold, or outright bartering. And as the currencies continue to break down, and I think they are going to continue to break down because, like the 100 leading economists talked about how it would be crazy to elect Milei. Obviously, they're doubling down on stupid, and they're going to keep making things worse, and the world is sliding towards totalitarianism. I think they're going to say, the solution to our problem is more of the stupidity that got us in this mess to begin with. And as they try that, you're going to see barter come back. You're going to see silver make a comeback. You're going to see people who maybe a year or two ago would not have been caught dead trying to trade goods or services for an ounce of silver will real fast relearn that history. And, people always ask me what can be done to protect against a currency collapse. I always tell people, get local, get to know a local farmer. If you're in a rural area, if you're lucky enough, find somebody who would trade a share of their farm output for precious metals. I know a lot of people who would be willing to do that. And as the world goes to hell in a handbasket, if you get local, if you shrink your circle and you develop that network now, you'll be set when that happens, or at the very least, your worst case scenario will be vastly improved while everybody else will be trying to pay for life with worthless currency.
Yeah, so it will be like in Argentina now, it's called the blue dollar. Maybe it will be the silver dollar again.
Bluedollar.net. You can go and you can see what the banks will give you for $1 versus what the street will give you.
And it's interesting you mentioned that because in Brazil in the 80s, when I was still living there, it was the same thing. You had they call it the parallel market, and the bank rate was always worse. So you had to go to like a travel agent, and they had an account offshore, and they gave you the real black, well, they call it black market, but it's the market rate. And you kind of wonder, why gold and silver are suppressed. I think it's the same thing because underneath the fiat dollar is gold and silver. So they do the same thing that these third world countries do, but they do it with gold and silver. So we've got about 15 minutes, if that's all right with you guys. And just wanted to tell the viewers, if you have any questions, just ask here in the chat. And if you want to ask David or Jack, make sure you let me know. So any questions? This is your chance.
And don't forget that thumbs up while you're typing your questions too. I see we got 1,000 people watching right now.
Oh yeah, thumbs up. Hit the thumbs up, and if you haven't subscribed to the channel, make sure you do. Okay, here we go.
Mario, if I might interject real briefly, you showed my website and thank you for that. But I actually rebranded to themorganreport.com.
All right.
I keep the silver investor domain, but I've actually moved everything over a decade ago to themorganreport.com.
Oh, themorganreport.com. Just have to Google that, right, David?
Yeah.
Yeah. Craig Johnson, would a gold standard be that bad for central banks? It would be like going back to 1913 and the central bank can start corrupting the gold standard all over again, plus the central banks own gold. I'll let you answer that, David, if you want.
He's right. I mean, that's there's a great article or set of articles by a guy on Gold Eagle, and I can't pronounce his name. It's an odd spelling. It's like TJAJA, but he wrote Gold Standard Fiat in Disguise. And he makes a very strong case that when you're on a monometallic standard, remember we talked about a bimetallic or trimetallic being the best. When you're on a monometallic standard, it's easy for the bankers to go into a fiat system. And that's what happened. I mean, I've got silver dollars from the 1900s, 1913, 1920, the peace dollar. And this is post the founding of the Fed. So he's exactly right. History shows that, and if you want to read, I actually have a hard copy because I don't want to lose it. It was very good thinking. At the time I read it the first time, I was kind of taken back to the guy's depth of thinking about why a monometallic standard, a gold only standard, really doesn't work. So I would say the gentleman's correct.
Yeah, I would also say that wars don't help either.
Right.
Yeah, there's another question here. I think it's a bit of a joke. Will Jerome Powell quit the Fed, or will Janet Yellen leave first?
Yeah, can I weigh in on that, Mario?
First.
Yeah, because I really do think, or I'd say there's a very good chance that Jerome Powell is trying to kill the Fed put. The belief that recessions are obsolete. No matter what happens, the Fed will print and lower, and therefore number only go up in perpetuity. Danielle DiMartino Booth, a lot of people who are active on Twitter have probably heard of her or seen her before on YouTube. She swears that Jerome Powell's made it his mission to kill the Fed put. And some of Powell's recent actions support that. Not all of them, but some of them. So if that is indeed the case, that means before we can return to Zerpenber, as I say, the zero interest rate policy and money printing, they need to get rid of Powell. So be very vigilant of that. If we see Powell suddenly step down or suddenly get replaced or retire for health and family reasons, I think subtly that means he has been removed and they're probably going to replace him with some kind of uber Keynesian or modern monetary theorist. I think the removal of Jerome Powell will probably signify that the return to Zerpenber is at hand when that happens.
Okay, great. Another question. What is the weakest link in the systems now? Who or what do you believe will start a chain reaction? Japan? ? US banking default? ? David?
I think it's cybersecurity. I think it's already started. So again, on my Twitter feed, I forget the bank's name. It's CI something in China, purportedly the largest bank in the world. They were hit by a cyber attack and that fouled up, or maybe the excuse is being made that it fouled up the debt market auction, the last auction that really was didn't go no bid, but there weren't as many bids as normal. So I think it's a cyber situation more than anything else.
Yeah, that was ICBC. It's the biggest bank in China, and I think they're the only Chinese bank that have a security license in the U.S. They can deal in securities. Let's have a look here. Thank you, EC660, for the super chat. He says 3 out of the best got signal today. Wanted to ask when repo runs out and the lending from the Fed starts to come due at that same time. What are your thoughts? Is the reverse repo? Do you want to answer that, Jack?
Yeah, actually, I just did a video about that on my channel. I had Joe Brown from Heresy Financial came on and we talked about that exact subject. I published that one on Friday. Joe is of the opinion, I'm inclined to agree with him, that it's not going to be an instant thing when the reverse repo runs out. We're not going to be in an instant credit crisis. There are a number of the Fed and the Treasury just love their extraordinary measures, right? Right now, the Treasury general account stands at about $800 billion. So if the reverse repo runs to zero, we could see Janet Yellen just say, we're not going to issue as many bonds. We're going to reduce the new issue of bonds into the bond market. Reduce supply would send the price higher, drive the interest rates lower. And they could spend down the Treasury general account in order to offset borrowing as much, which of course, it's an election year. Let's not put it past them. That would be setting up whoever comes after to deal with the mess of no money left in the Treasury general account, plus the debt ceiling expiration. So they could time that. And at $800 billion at our current rate of deficits, that could get us pretty much past the election. They could also, we could see a new Fed program rolled out, a new acronym for not QE. We could see an outright return to QE. So reverse repo, I think, is a clock, and it is ticking down at an alarming rate. By my estimates, will be at zero by mid-February if nothing changes. When that happens, they're going to have to do something different, either start spending down the TGA to reduce new issuance, or the Fed will step in and start buying again. But I don't think it's going to be like that day, instant credit crisis.
David, Lord Humongous just wanted to say hi to you. He said he's been following you for over a decade.
Thank you.
Just walk away.
There's a question for me here. You said the UK Treasury is issuing 240 billion in gilts. Is the Bank of England going to be buying them if bond investors worldwide are avoiding them? Well, the Bank of England is doing QT as well, so they're not buying them right now. But that might change, because they're talking about the fact that the Bank of England could start cutting rates before the middle of next year. So if you're cutting rates, doing QT is like, it's like accelerating and braking the car at the same time. So you have to do one or the other. So I think, they'll stop QT quite soon, I think. And that's how the Treasury will get away with it. Let's see if we got any more. We've got 5 minutes. We've got 5 minutes. See if you've got any more questions. Well, yeah, David, you mentioned, I have a question for you. You mentioned the cyber event. Is that because of, do you think they're planning this because, a year or two ago, Klaus Schwab said the next pandemic will be a cyber pandemic, and is that their excuse or cover to try to bring in CBDCs, you think?
Could be. Certainly it gives them a real nice excuse. We don't know who did it. They'll probably, possibly the Russians, but we're not sure. And boy, would that be an easy way for them to make a big excuse that really couldn't be traced. Obviously, my belief system, it could be done by themselves, but then they, pulled the fast one that really, wasn't them, of course. And we're so sorry, but we have rebooted the system. And all you need to do is go down and get your real ID. And once you get your real ID, you come back to your bank and we will reboot the system. It will all be digital. This will never happen again, because with your real ID and the new system, you're going to be so safe and secure. You're never going to have to worry about us running your lives from that point forward.
Someone's asking you about Switzerland. They're saying Switzerland gave up neutrality for Ukraine. Can they be invaded now and vaults taken? Russia, maybe. Well, I think the Swiss, what you're talking about there is that they froze some of the wealthy Russians' accounts, but I think they reversed that, if I'm not mistaken. Do you guys have any view on that?
No, I don't know.
Go ahead.
Go ahead, Jack.
Yeah, if there's one thing we've learned from the last few years, it's that this myth of the Russian tanks rolling across Eastern Europe unmolested is obviously not something that sane people should be fearful of, right? That war's been fought to a stalemate at this point, regardless of your position on it. Russia is not a threat to Western Europe or the Western way of life. It's clearly not, unless things go nuclear. But I mean,
I would add also that Switzerland, yeah, that's where all the elite people with a lot of money, that's where they keep a lot of their assets. So I think that's going to stay neutral. I don't think it has, yeah, it will be invaded. Hizia has a question. Hizia 18. What does it mean when a central counterparty clearinghouse requests to withdraw registration as a clearing agency? ICE Clear Europe had it granted recently. Maybe Jack, that related.
I do not know what that means. I hadn't seen that. Ice Clear Europe.
I know ICE is the Intercontinental Exchange. Yeah, request to withdraw from register. Maybe they just don't want to clear the trades anymore. I don't know. I don't know what that means. David?
No, I don't either. What I will voice is something I think that you and Jack already talked about, but this DTCC situation, where basically the Great Taking puts it in clear English that you don't own anything. I mean, when you have a bank account, you deposit your money, it's a loan to the bank. It's really the bank's money. And the same thing with stocks and bonds. So I don't know anything about this ICE situation. I have to look it up and read. But on a big picture, it's probably something similar to what this DTCC situation is. And that is you only have the illusion that you own this asset when in reality you don't.
That's right. Okay. Guys, I wanted to thank you for coming on the show. And yeah, Jack, do you want to any final words, and maybe you can tell the viewers again where they can find you?
You can find me. I'm Nobody Special Finance on YouTube, and you can also find me on Twitter at JG_Nuke. That's my Twitter handle. All my content goes on both. Real quick, on just to touch on the topic of the cyber attack, and you mentioned Air Klaus has been warning about the cyber attack. In the last 6 months or so, not just the ICBC hack that happened that supposedly contributed to the 30-year treasury in the U.S. to that auction being pretty lousy 2 weeks ago. But not just the ICBC hack. You had a few weeks ago, you had the Japanese interbank transfer system went down. That system has worked like clockwork for about 50 years. And then all of a sudden it went down because they said there was a software update that didn't go so well. Okay, your 50-year perfect track record interrupted by an update. We had the ACH system at the Federal Reserve went down. People couldn't get their direct deposits. That was about 3 weeks ago. All right. And that was supposedly one guy fat fingering data entry that took that down the ACH system, which again has worked like clockwork for decades without fail. A day after that happened, you had Mr. Cooper got hacked. 4 million people couldn't pay their mortgages. Nothing about it in the mainstream press until about day 3. That coincided with the DTC jacking up margin requirements for mortgage-backed securities, with this rumor of some mortgage lender getting raided by the FBI. We never got clarity on what that was all about. We also had Meridian is the name of one of these big capital firms that issues a lot of mortgages and sells them to Fannie and Freddie. They got booted out of Freddie because they're under investigation right now. They weren't booted. They were frozen. You had the Australian power grid was hacked in the middle of this year. That was apparently on the brink of failure when they basically severed the hard line. We've had a half a dozen different air traffic control systems around the world go down in the last few months under suspicious. We updated our servers and something broke. This cyber war thing looks like it's happening, and there's just way too many of these things happening right now to be a coincidence. And you're talking about systems that have worked flawlessly for decades. And all of a sudden, they're all going down under suspicious circumstances just after this AI boom happens. So I would say be very mindful of the people who are in charge of artificial intelligence. We had this big drama over the weekend. Sam Altman was booted out of OpenAI, and then there was this coup in the board, and I don't know what's going on there. But the software that is going to control our lives, be mindful who you turn the keys of that over to.
Yeah, I mean, they're making a big deal out of this Sam Altman, who I'd never heard of. So, David, any final words, and maybe you can tell the viewers where they can find you?
Sure. Jack, thanks for that to really put some power behind my statement about what I think's going on. I appreciate it. Jack and I really hit it off, by the way, when I met him at the Silver Summit. It's got a lot in common, actually. So back to me, I just want to talk about the fact that, I'm getting older and maybe a bit slower. I think my mental facilities are still there. I feel as sharp as ever. Maybe I don't come across that way. So here's my point, my final statement. I've given up on writing another book. I mean, if you look at the Silver Manifesto, it is an academic book. It was designed. I mean, I wrote it for, academics that really want to dive into the stuff in a deep way. So I'm going to make a movie. It's a documentary. It's called silversunrise.tv. So if you go to the URL, silversunrise.tv, it's basically just a landing page. It's pretty simple.
Yeah.
I have a couple of trailers up there.
I've just put it on the chat for the viewers.
I did. I just put it up there.
Yeah, and I've put it on the chat for
Oh, you did. Thank you. Thank you, Mario. So I'm looking to make this movie and do a lot of interviews with people across the board, not just people that are hard money advocates. I basically want to ask every one of them, if you could change one thing in the world and make it better, what would that be? And that could be organic food. That could be teaching critical thinking in schools. That could be honest money. It could be, teaching love or emotional context with how human beings can interact, why social media is a distraction rather than bringing together. I mean, on and on it goes. Certainly, there are a lot of things in this world that have been corrupted, and we need to come back to the basics. And I think that the collapse will make that happen. And remember, in a financial collapse, really nothing changes. All the buildings, all the roads, all the schools, all the oil, all the wheat fields, it all stays there. So what happens in a financial collapse? Well, what happens is the currency is usually destroyed. And so you have to reprice everything on a free market basis. And sometimes the ownership changes greatly. And especially if you go to sound money again, where the people decide what the value is and not the bankers.
Great. Thank you very much, guys. I wish you all a great week, and hopefully we'll get back together soon.
Thank you for having me.
You're welcome.
Thanks, Mario. It's good talking to you, Dave.
Yeah, nice talking with you, David, for the first time too.